Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. I'm Brian Fernandez, and it's Wednesday, the 26th of April, and we have Craig Erlam, Senior Market Analyst at Oanda, coming in from the UK as our guest today. Craig, as always, great to have you on the show.
It's always a pleasure to join, Brian. Thanks for having me on.
Now, Craig, before we get your insights, we're going to take a look and see how the market numbers stack up for the first half of the day. We start, however, with cryptocurrencies. Bitcoin is at 28,342. It's up 3.7%. Ethereum is at 1,865. It's up 1.78%. Looking across the regional stock markets, which are all now reopened after the holidays over the last few days, we've got the SGX, which is down 0.15%. Bursa Malaysia is down 0.73%. Shanghai is down 0.27%. The ASX All Ordinaries is down 0.2%. The Nikkei is down 0.78%. The Hang Seng bucks the trend, though. That's up 0.54%. And rounding up the numbers, we've got the Kospi, which is down 0.25%. Now, Craig, your view on market performance in the first half of the day?
So, yeah, I mean, it's a bit mixed. It feels like this is kind of consistent with what we've seen for a number of days now. It does feel like we're in this awkward moment, should we say, where we're probably a month or two away from getting a good sense of the economic data that as to whether we are actually overcoming these inflation challenges. I think the data from Europe and the US is going to start to become much more clear over the next couple of months. Of course, it's now just over a year since the Ukraine invasion when prices spiked. So we'll start to see what base effects start to do to these inflation numbers and whether we're going to see signs of sustainably lower levels of inflation, which means the end of the tightening cycles from central banks, the knock-on effects as well on things like labor markets, particularly in the US. I think the next couple of months are going to make things much clearer going into the end of the year. So it feels like we're in a bit of a wait and see pattern. So we're seeing a lot of choppiness in these markets. We're seeing a little bit more sideways action as well. And it feels like that's how we started the day also.
Now, Craig, I want to zoom in on Wall Street performance overnight. Kind of a mixed bag. On one hand, banking stocks were battered. And then on the other hand, we've got good numbers out of the likes of Alphabet and Microsoft.
Yeah, I mean, like you say, still just a big old mixed bag. I mean, I think the First Republic story, the level of withdrawals maybe caught people off guard. And it's a reminder, really, that these banking jitters have not gone away. That while the Fed has put these backstops in place and the US Treasury to some extent as well, that people are still not feeling comfortable. They're not feeling confident in these lower to mid-tier banks that their cash is ultimately safe and that it wouldn't be better placed somewhere else. So I think that was a reminder that there's still a lot more confidence that needs to be rebuilt and restored before the banking sector can be seen as safe. And then, obviously, the knock-on effects of that is things like credit conditions in the US. We're already seeing signs of credit conditions tightening, and I think that will become a lot clearer over the course of the next couple of months. That's going to have a massive impact on the kind of cost of credit in the US, therefore the economy. But there's obviously those who are most notably impacted by this being the kind of small to mid-tier companies who rely on these small to mid-tier banks for their financing costs as well. So I think that's been a big story in the US. Is probably going to continue to be a big story now going forward as we make our way through earnings season and see how some of these other smaller institutions have fared over the course of the first quarter.
Now, Craig, then looking through your Oanda eyes, where are the trading opportunities right now?
I still think it's an incredibly challenging environment, to be quite honest. I mean, I think when you're looking around these markets, the fact that gold, for example, has continued to remain really high shows that people are still in need and still wanting that safety net. I think also that there is an expectation that we are near the peak of interest rates right now and that they will start to drift lower. So I think gold still continues to look attractive to investors and for that dual purpose. as it were. If we're looking through equity markets, I do think once interest rates start to come down again, and I do think that is still going to be the case as we make our way through the year, I still think credit conditions have tightened, or seem to have tightened, to the extent that the Fed's job has been partly done for it and may actually force it to reverse course. And I think that's going to help to lift sentiment a little bit. The economy is still resilient. We may see a mild recession, but I don't think that's going to stop some of these equity markets, maybe following a blip of some sort. I do think we will start to see them bounce back. And then I think when you look at how these tech stocks have fared, especially the bigger names, I do think there is therefore scope for them to outperform other areas of the market. I think there are going to be areas of weakness as well. I think things like consumer discretionary stocks are a potential vulnerability. And the reason is clear. Pandemic savings have been drawn on already very significantly. More than half of pandemic savings have now been spent, and particularly those across the kind of low to middle earners, where the propensity to spend is so much more higher. I think that's probably been whittled down almost entirely, and therefore that's going to be less of a buffer compared to what we've seen over the course of the last year. Then, like I say, higher cost of credit and all of this, I think is and maybe a higher unemployment rate as we start to see the rate hikes have a more of a direct impact on the labour market now over the course of the next over the remaining months of the year. So consumer discretionary could be a potential area of vulnerability. But like I said, there are opportunities and there are vulnerabilities, and that's the kind of shaky market that we find ourselves in now.
Craig, it's always great to have you on the show. Thanks for coming on.
Thank you.
Now, we've been speaking to Craig Erlam, Senior Market Analyst at Oanda, on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. I'm Brian Fernandez, and this show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.